Can we talk about money without playing a little Pink Floyd, huh? Meantime, a new survey shows consumer confidence dropped in the month of December, even after other reports suggest people increased their holiday spending at the biggest rate in 4 years' time. So what do these two divergent numbers mean as we get ready to turn the page to a new calendar? Here to talk money strategies for the new year, Connie Mack, owner of Clarity Financial. Good morning to you.
Good morning.
So we're looking at these things, and it really seems to not make sense. People have a dismal outlook, yet they are opening up their wallets and they're racking up debt. What should we make of all this?
Well, normally during a contraction and going into a recovery for an economy, the administration normally gives the economy a bridge loan, if you will. And what that involves is lowering interest rates. We've seen quantitative easing where they've taken additional measures above and beyond raising interest rates. And now they are extending unemployment benefits. So what I would take for this is that the consumption as well as our recovery thus far hasn't gained traction. It doesn't, I consider it as it's still being on training wheels, if you will. So that's how you explain that disconnect between the average consumer not necessarily feeling confident about their situation because they might either be unemployed or close to unemployment, but the figure showing something different, and that's that government intervention that we're seeing.
So if people are always looking for ways to make some extra money, and investment has always been the deal to do this, where do we put our money?
Well, going into the new year, investors have to look at focusing on their goals. You have to have clear and definable goals. That will guide everything that you do. If you're focusing on your goals versus focusing on the market, you tend to be a dog chasing its tail because you're going to chase returns. Focusing on your goals will guide you whether or not you should put more assets in stocks or bonds. Right now, the equity market has moved up very well the second half of the year. So I've been advising clients to take their profits, because there are two reasons for that. First off, we have tax rules or tax laws that may be extended for the next 2 years, where you have capital gain rates that are more favorable to you. At 15%, they may go up, depending upon what the House decides to do. And also, because this economy hasn't gained traction yet on its own, this may be a good opportunity for you to cash out and accomplish some of the goals that you've had long term, such as paying off debt or catching up on retirement savings.
We look at interest rates. In fact, new numbers suggest they ticked up just a little bit, at least for mortgage rates, and bond rates kind of follow to some degree. Still historically low. Are bonds out right now?
Bonds are not necessarily out. Again, that goes back to chasing your tail type of deal. What's going to be the latest fad? Focus on your long-term allocation, your long-term risk tolerance. Investing is 90% psychological, 10% technical and analytical. So you don't want to let your emotions get the best of you. So for the short term, over the last few months, interest rates have moved up markedly. As a result, bond prices have moved down. But that's not a reason for you to move out of bonds and start chasing returns in the stock market. You want to stay balanced.
Any notable dangers that we ought to be on the lookout for here?
Well, you want to be aware of the real estate market going into the next year. We've had a moratorium on foreclosures. That moratorium is going to end. The recovery thus far has been as a result of our changing of mark to market with our banking. So we don't know what type of bad loans that are still on banks' books. So you want to be on the lookout for those things. And of course, overseas in Europe, the sovereign debt crisis, even though it's gone away a little bit, every time a country has to go in and refinance their debt, that issue is going to come up, and it's going to cause a lot of volatility in the market.
And that volatility stands over here on this side of the pond as well. Connie Mack, we do appreciate the wisdom from Clarity Financial. We appreciate it. Thank you very much. Happy New Year to you.
Happy New Year.